In this video, we are going to see about Industrial Finance Corporation of India. I am Dr. M. Radhika, Assistant Professor of Economics, Sri Sharda College for Women, Salem. Industrial Finance Corporation of India, we call it as IFCI. In that, now we are going to say about overview of IFCI, then historical context of IFCI, functions and services offered, organizational structure, financial performance and key metrics, IFCI's impact on industrial development, challenges and opportunities, recent developments and future strategies. In conclusion, IFCI's continuing relevance. Let us see it one by one. First one is overview of IFCI. In that, what is IFCI? When it was established and what was its history? Mission and objectives of IFCI. Industrial Finance Corporation of India is one of the India's oldest and most prominent development financial institution. It was established in 1948 under the Industrial Finance Corporation of India Act. Main aim is to promote industrial growth and economic development in India by providing medium and long-term finance to industrial enterprises. The primary objective was to help in the establishment as well as expansion of industries, thereby contributing to economic self-reliance of India post-independence. As a development financial institution, IFCI primarily focus on bridging the funding gap for industrial enterprises and supporting the growth of various sectors, including manufacturing, infrastructure, and service sectors. Over the decades, its role has evolved, adapting to the changing dynamics of the Indian economy and the global financial landscape. Let us see what is meant by IFCI. IFCI is a development financial institution. It is a financial entity that offers specialized funding and services to promote industrial, economic, and infrastructural development. Unlike traditional commercial banks, FDIs focus on long term financing and facilitating industrial growth by providing loans, equity participation, advisory services, and project financing for development projects. IFCI's roles as a development financial institution is crucial because it targets sectors that often do not have easy access to financing for conventional banks, especially in the case of high capital investment projects. Its role is to finance projects that are expected to contribute significantly to the economic and industrial development of the country. In establishment and history, when it was established as it was established in 1948 at the time when India was transitioned from colonized nation to an independent republic. At the time, Indian economy was largely agrarian with limited industrial infrastructure. There was a substantial need for financing mechanism industrialization. Initially, IFCA was a government owned institution that worked under the Ministry of Finance. Its role was to provide long term loans to industries in India, particularly for the establishment of large scale industries. The foundation of IFCI laid the groundwork for industrial growth in key sectors such as steel, cement, chemicals, machineries manufacturing. Over the years, IFCI also expanded its offering to include equity financing, and assistance to small and medium sized enterprises, thus broadening its reach. Mission and objectives main is to promote industrial growth. The missions are straightforward: promote industrial development in India. Its key objectives are industrial growth, infrastructure development, regional development, and employment generation. In historical context, we are going to see about early stage of industrial development in India, IFCI's contribution to key industries, evolution over time. In early stage of industrial development, IFCI was relatively underdeveloped in India's industrial landscape. Most industries were either in their infancy or lacked the necessary capital to grow. The country's infrastructure was weak and it was heavily dependent on imports for many goods. The Indian government recognized the need for heavy industries and infrastructure projects to ensure sustainable economic growth. During the early stage, IFCI played a crucial role in providing the necessary financial support to establish industries that could serve as the backbone of India's industrialization. These included large scale enterprises in steel, cements, chemicals, and other critical sectors. The key industries contribution mainly for steel industries, IFCA played an instrumental role in funding the steel sectors, including major plants like Bhilai Steel Plant, Rourkela Steel Plant, which became pillars of India's industrial infrastructure. In cement industries, it contributed to the construction and infrastructure sectors also. IFCA was involved in funding large power plants that helped in electrification of the country, which was a crucial step for industrial development. Over the decades, India's economy has undergone significant transformation. In the 1990s, the country experienced economic liberalization, which introduced more competition, including private sector participation in financing. This shift meant the role of development financial institutions like IFCA need to evolve to remain relevant in a more competitive and market driven environment. During this period, IFCA diversified its financial products to include equity participation, venture capital funding, and syndicating of loans with other financial institutions. Regarding functions and services offered, it provides direct lending, underwriting and investment, advisory services, and other services. IFCA provides a wide range of services primarily focused on financial support to industries and infrastructure projects. Its core functions include direct lending. In direct lending, project financing is one of the key services provided by IFCA. This involves offering loans for establishment or expansion of industrial projects. Typically, these loans are for long term periods and come with relatively flexible repayment terms. Underwriting and investment. IFCA also acts as an underwriter for large industrial projects, helping companies raise capital through debt and equity markets. Moreover, IFCI directly invests in key projects by providing equity and taking minority stakes in enterprises. Regarding advisory services, IFCA offers advisory services to businesses, particularly in areas like financial restructuring, mergers and acquisitions, as well as corporate governance. These services are crucial for companies looking to enhance their operational efficiency or navigate complex financial challenges. Regarding other services, IFCA provides services such as leasing, that is, financing for acquisition of capital assets, and factoring, providing finance against receivables, which help businesses manage their short term financial needs. Organizational structure, board of directors and management teams, key departments and their responsibilities, subsidiaries and joint ventures can be seen another. Regarding board of directors and management team, the governance of IFCI rests with its board of directors, which includes representatives from the government and professionals with expertise in finance and industries. The management team is responsible for executing the day to day operations and operates under the guidance of the board. Regarding key departments and their responsibilities, IFCI has various departments that manage specific aspects of its operations, like project finance, responsible for assessing and financing industrial projects. Risk management ensures that organizational effectively manages risk related to credit, market fluctuations, and operations. Legal and compliances ensures that IFCI complies with all regulatory requirements and manages legal issues related to financing. In subsidiaries and joint ventures, IFCI has several subsidiaries and joint ventures focused on specific areas of finance, including IFCI Venture Capital Funds and IFCI Infrastructure Development Limited. These entities focus on providing specialized financial services, including venture capital and infrastructure funding. The next one is financial performance and key metrics. In that, the first one is analysis of IFCI's revenue, profitability, and assets. IFCI's financial performance is generally assessed through its revenue, profitability, and asset base. Historically, IFCI has been profitable, although its financial health has been affected by broader economic trends such as recessionary periods or regulatory changes. Its revenue mainly comes from interest on loans, fees for financial services, and returns on equity investments. The next one is key financial ratios. Key financial ratios used to assess IFCI's financial health includes debt to equity ratio. It is a measure of company's leverage and its ability to service debt. Return on assets, which indicates how efficiently IFCI is utilizing its asset to generate profits. The last one is net interest margin. It is a key profitable measure for a financial institution. The next one is comparison with peer institutions. In comparison with other development financial institutions like SIDBI or IDBI, IFCI has faced challenges related to its relatively smaller size and increased competition from private sector banks and NBFCs. Regarding impact on industrial development, case studies of successful projects financed by IFCI can be seen here. Contribution to employment generation. The last one is impact on regional development is given here. The first one is case studies of successful projects financed by IFCI. IFCI's financial support has been crucial in the development of several landmark projects, particularly in the steel, cement, and power sectors. For example, it was instrumental in the development of large steel plants like Tata Steel and SAIL, which remain some of the largest contributors to India's industrial output. Regarding contribution to employment generation, by financing industrial projects, IFCI has contributed significantly to employment generation. These projects have not only created jobs within the companies themselves but also facilitated downstream employment in related sectors such as supply chains, transportation, and services. Regarding impact on regional development, IFCI's financing has played a crucial role in balancing industrial development across India. It has facilitated the establishment of industries in underdeveloped and rural areas, promoting regional economic growth and preventing excessive concentration of industries in metropolitan regions. The next one is challenges and opportunities. In that, increasing competition from private sector banks and NBFCs. The rise of private sector banks and non banking financial companies has created significant competition for IFCI. These institutions often offer more flexible financing terms and better customer services, leading to a reduction in IFCI's market share. Regarding regulatory changes and compliance requirements, as a public financial institutions, IFCI is subject to a complex set of regulatory requirements, frequent changes in financial regulations, tax laws, and government policies can pose challenges for IFCI, especially in terms of compliance cost and adjusting to new financial norms. And opportunities of infrastructure development and emerging sectors, IFCI played a major role. The increasing demand for infrastructure in India presents significant opportunities for IFCA, with the government's emphasis on initiatives like smart cities, renewable energy, and transportation infrastructure. IFC can position itself as a key player in financing large scale infrastructure projects. Recent development and future strategies. IFCA has been focusing on strengthening its position in emerging sectors like renewable energy, technology, and infrastructure development. It has been working on expanding its portfolio of equity investment in high growth sectors. Regarding focus on innovations and technology, as a part of its future strategies, IFCA is adopting new technologies to streamline operations and improve customer service. The organization is also exploring digital finance solution to stay competitive in a rapid evolving financial landscape. Regarding future growth plans and objectives, IFCA aims to diversify its portfolio further by focusing on green finance, venture capital, and infrastructure. It is also exploring strategic partnerships with international development finance institutions to boost its funding capacity. We come to the conclusion path of at IFCA played a pivotal role in India's industrial development since its inspection in 1948. Its contribution to key industries such as cement, steel, and power have had a lasting impact on the country's economic growth. Although it faces increased competition and evolving regulatory challenges, IFCI's continued focus on infrastructure, emerging sectors, and innovation positions it for further growth. As India moves towards becoming a global economic powerhouse, IFCI's role in financing industrial and infrastructure projects will remain critical in fostering sustainable economic development. Its ability to adapt to changing market dynamics will ensure its continuing relevance in India's financial ecosystem. So that's all from this side. Thank you.